Welcome back, passive income investors. Today, breaking down British American Tobacco, one of my favorite companies this year so far. And I have to talk about this and break this company down because I started buying it at the beginning of January, but I've got a whopping somewhere between usually a 20 and 25% gain, just around $1,000. And I'm not done buying this, so I'd like to see it drop because it's just going nuts here with a whopping 6.6% dividend yield. And I want to talk about this because I think it was hilarious that this company was trading at a PE of 2. That is where it was at when it hit its bottom, guys. And we're talking about the second largest tobacco company by revenues of all time. So let's jump right into this one, guys. Now, I wanted to talk about this for a few reasons, but we'll start with how I kind of discovered this company. So essentially, a lot of people started talking about tobacco stocks over the last year because their charting has been an absolute disaster. This is one of those companies that just started tanking because tobacco sales were falling. People were getting into vapes. There was just a lot of negativity toward tobacco, and this looks like the updated dividend yield because I do believe they have increased it a little bit for the next payout, so it's back up to 8%. But again, we're talking about a company right now that is back to a forward PE of 11, but not even 2 months ago was at a PE of 2, which was absolutely insane in my mind. I couldn't get over it. And I started reading articles, starting with like the Motley Fool, is British American Tobacco a buy? And I really hate these articles. They're very biased and they really beat these companies into the ground without looking, again, for me, it's like historical fact. Since the US was discovered, since Canada was discovered and Indians, whatever else, people have been smoking tobacco. It's been recorded for a long time since we've been finding bongs and pipes and things of that nature to smoke tobacco and other herbs with. And a lot of these articles I don't think recognize it almost reminds me of like gold. It's just something that has just been in our history books for a very long time. And I hate the end of this article because they kind of go over everything and they kind of just hit it in the butt here with this stupid statement I don't like. First of all, its revenue does not continue to rise because it has pricing power in an inelastic cigarette market. The operating profits are still expanding it at more than 15% of its year-ago price. It may just be worth it to take a position in British American Tobacco for a dividend while waiting to see if it can turn its business around. Now, this statement makes it sound like this company isn't doing well. 50% drop. Can it turn the business around? Like this last following statement really drives me nuts, and I'm going to explain to you why as we look into their books and one of the reasons I started buying it 2 months ago. But let's take a quick look at their website and overview because there's a lot of things going on beautifully for this company, especially for anyone that started buying the dips. So let's just start getting into this. First of all, the thing most attractive to you guys, I'm sure, is the dividends. These dividends are very all over the place, and there's a good reason for that. It has to do a lot with conversion rates, because this is, again, British company, along with they tend to pay out pretty high dividend yields, so essentially you're getting whatever the profits are, depending on acquisitions and other things can be a little bit choppy. Guys, some of their dividend payouts were pretty massive. So this isn't like one of those stable dividend companies, but it has consistently paid out a very nice dividend yield for quite a continuation of time. So I want to look through their website here because there's just so many funny things going on with it. And then I'm going to get back to some of their books and their fundamentals, guys. So there's the this is the actual payouts in their website in the GBP, guys, just to show you the differences in payouts going back to 2010. But really quickly here, it's not what I want to find. We want to look into their investors here, guys, and some of the news that's going on, because BAT performed well in 2018 while continuing to invest in long-term sustainable returns on an adjusted constant currency represented basis. This was strong performance across the business, and high five to you, sir, because yes, it absolutely was. 2018 was a phenomenal year, and they've also got involved with something I think that is really funny, that they're really getting into the press. This is what I like. They're getting into vapes, and they're using loopholes that allow them to do things that tobacco companies haven't been able to do in a while. So I wanted to just listen to this, just the beginning of this real quick. I found it really interesting.
Tobacco has a long and controversial connection to Formula One. Cigarette logos used to adorn racing cars for years until they were banned in 2006. But now the UK's biggest tobacco company, British American Tobacco, is announcing a partnership with McLaren, the Oxfordshire-based firm famous for its F1 team. Well, the tie-up will focus on technology as BAT further develops its range of what it calls potentially reduced-risk products, such as vaping and heated tobacco.
So essentially, I think it's funny because they're using these really loopholed, non-combustive vapes, as they kind of promote them as, to get back into ad games and using new promotive methods, guys. So this was big news. I love when companies are able to do things like these because it creates headlines and interest and drives investors, which right now I think they do need, but preferably slower rather than faster, as I'm not done buying. So really quickly, before we go into their product lineup, guys, and some of these, just some of their PowerPoint presentations here, I want to just go back to their books really quickly, and then we're going to compare some of these charts, and you're going to see why they're able to pay out like some pretty high dividends here and there through 2017, 16. And let me go back here really quickly because we're going to take a look at some of the fundamentals. So I want to analyze their balance sheet because it is quite a mesmerizing thing to look at, guys, here. So we're looking at these in USDs. With incredible trading volume up again today because that share value is so undervalued. It just keeps rallying. And let me tell you why. When you look at the very first thing here, guys, you can see their cash flows, their net and short-term from investments. In 2017, you can see why they had some big dividend payouts because they had some extra cash on the books. We want to look at the same thing we always say to look at, guys, which is assets versus liabilities, because their assets versus liabilities is what's going to lead you down the road of understanding is this company going to be able to sustain. And we're talking about a company with total assets of about 195 billion, but that doesn't make a whole lot of sense because when you look at their market cap, you're probably thinking to yourself, how can their market cap only be 92.19 billion, but they have more assets than that? Well, that's why we have to also look into their net liabilities here, guys. So we're going to scroll down to liabilities. We have about 107 billion in liabilities. So if we minus these out, you're looking at roughly 88-90 billion dollars in assets, which is literally what their net worth almost is, guys. Like they're literally just trading, their market cap is just trading above their net assets, which again, because the company tanked so bad and they were only trading at like a forward PE of 2, you were literally getting this company at its base value for its assets, which blew my mind out of the water. And I knew a lot of investors that were talking about this company because, again, when you look at this balance sheet, it is hard to get over how robust it really is, considering this company apparently was falling apart. When we look at their income statements, we can see a definite increase in total revenues. But again, a lot of it was from operating expenses and things like that because tobacco sales were falling. They were just finding ways to increase operations and percentages of just returns and whatever assets they were moving, tobacco, vapes, whatever. But recently, that's all changed, as we can clearly see with their total revenues increasing whoppingly large, which is really nice to see. If we look at their cash flows, we have total cash from operations, which is just absolutely exploded, whereas in the last couple of years, it was running a little bit stagnant, and it dropped from the 2015, which is why there was a lot of paranoia. But this company is showing some, again, robust insanity, as it should, because it's a company that sells tobacco and things that have been in our historical books in museums since 16th, 17th century, guys. This stuff really matters, and this is probably one of my favorite balance sheets I've seen in a while. I don't like that Scotia doesn't show me this on this half of it, but again, I think it's just because it's a company that's in the Europe, British American Tobacco, obviously British. So I mean, they don't. At least they give you a good income statement here, and they do it in the USDs. Really helps out. Because if you go to their website, you're going to see everything else is in their currency, which is GBP, I think, if I said that right. Don't quote me on that. But again, take your time to look at this balance sheet, guys, because again, we're talking about a company that was trading at a PE of 2. Literally 2. Still, I think, insanely undervalued, and it looks like I'm not the only one that agrees with that. Just something you want to see in a large company with a healthy balance sheet, guys. So let's go back into the investor presentation, guys. If you don't know British American Tobacco, if you don't smoke, if you are morally against cigarettes, I salute you, sir. If it's not your investment type, I mean, good for you. But it is for me, and I used to smoke cigarettes. I am now over a year and a few months, I think, without tobacco. I do want to get a cigar again. I bought one as a gift for someone. I smelt it for like a week while I had it. I love the smell of cigars, but I want to be able to enjoy it without being addicted to it. But looking at this company's overall look here, guys. We got Vape is the vape. Obviously, some of the big number one tobacco cigarette products like Pall Mall, Fuse, another vape. A lot of good companies here, a lot of good brands, guys, and we're going to go over some of this. But I want to start with this right here. So this is where people think because the slowing of tobacco came from. They mainly increased revenues, but revenues, well, income for cash flow and things like that. But you'll notice that their growth stagnated for a little while here because clearly they were finding a way to make more income from their operating expenses, whereas their overall growth really stagnated, which caused the stock to freak out and people to come up with these kind of ridiculous articles. But over time, this company has done quite a good earnings per share here, guys. Normal, healthy growth rate, average market return, which again you want to see in a company. Because these companies are such staples to society, in my opinion, I don't think you're going to get a safer moat than a company like this, which is why I couldn't get over that massive drop. But again, let's just take a look at their chart here, guys. Can I go find their charting real quick? Just because I haven't showed this yet, I don't think the full chart. Just so let me show you how long this company's been trading for. And I just want you to look at what's happened here. And the rest of the market had not seen a correction this large. We're talking about a company that did well over a 50% drop. Well over. I mean, we're talking about almost a 60-70% drop, which sets a lot of ding-dings off because, again, when you look at the growth rate of this, it looks like it's right on track, and it leveled out. If you were to do your Fibonacci rando lines, as I like to call them, you'll notice that the sustainable growth of this looks like it was following a decent trend, and somewhere it got way out of whack up here. But we're talking about a decade of growth followed by a nice collapse, which means I don't think if you own this before, you should be selling it. I think you should have been buying this dip because I think this drop was way over exaggerated. But let's just go through their PowerPoint presentation here, guys, and just take a quick analysis of some of the stuff going on here. So you can take a quick look. Pricing remains robust. Company's done very well with their organic price mix. THP, I'll explain what that is. These are like they're how can I explain it? They're like the other ways of consuming tobacco. I'm going to say like gum, sprays, things of that nature. The U.S. remains a great opportunity for these guys. We can see some growth going on here, but I really want to look at some of these other charged GBP shares. So here's another nice little chart. Nicotine consumer pool continues to grow because, again, we saw this stagnating growth going on here, guys, which started freaking people out, and we only just recently started seeing some good growth that had to do with their vapes and their other products that aren't directly tobacco related. So here's the THP. These are essentially people that use predominantly things, again, of gum, sprays, whereas right now in North America, they're mainly selling a lot more of their vapes and things of that. And then, of course, in Japan, where their Vape and other things are like the number one selling vapes, they're getting like a mixed rate, clearly, of people trying out a bunch of different products. So here you have the oral, the THP stuff, which, again, sorry, I might have been saying that wrong. Tobacco taste and sensorial. Sorry, I might have been, but I thought that was, I still think that counts as some of the sprays and things like that. We got oral and then vapor, of course. So vapors offer new revenue opportunities, which we can see have increased. Not hugely. Combustible tobacco is still the number one thing selling, obviously, but this stuff is slowly catching up behind, which is something we all have been dying to see work out over time. I love that these tobacco companies are so robust. They have good capital, and they're able to expand into these markets because it's really going to give them a diversification and continue to sustain that dividend growth, which is super appealing to me, and I'm sure should be to you as a dividend investor. Even at this current price rate, guys, I'd still put this as a buy, which is why you can see that the company is having such nice growth over the last little while and continues to spout up day after day, considering it just seems so undervalued. I'm going to leave this this presentation PowerPoint you can find on their website, but I'll probably leave the link in the description below for you guys to check out. I highly suggest you go over this company because it is one, all the tobacco companies, a matter of fact, again, I don't talk too much about MO because I have a lot in the past. They're investing into marijuana. They also own one of the biggest vape companies as well. So that's British American Tobacco for you guys. I want you to let me know in the comment section below if this is a stock you would buy. Obviously, I am completely one-sided on this. I own it, I'm buying it, I love it, I want more of it. I am not a financial advisor. I'm not here to advise you on investing, guys, but this is a community that I want to grow and learn from. So you guys let me know what you think. If there's anything I missed, keep me in touch, in the loop, and I will do my best to do the same for you guys. Super fun, super cool, something awesome. Keeping some videos for the weekends for you guys. So I will catch with you very soon.